For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
Welcome to the simple side. Market beating picks inside. There's no jargon and no time to waste. Join the simple side and end up in first place.
All right, welcome back, or welcome to, if it's your first time, The Simple Side on Substack. We are one of the top financial newsletters in the world with over 265,000 subscribers, hundreds of paying subscribers. And before I say another thing, I want to say good morning, Merry Christmas, Happy Holidays to you, Happy New Year if you're listening to this after that. Welcome to the only financial newsletter that Santa subscribes to. That's right, speaking of Santa, if you want a great gift for the financial nerd in your life, I think you know what to do. Give a gift of a Simple Side subscription to that person right now. You can go and find a link to do so in our newsletter, thesimpleside.substack.com. And this newsletter will be the biggest one up there on the banner if you're listening to it within the week. Of course, I have a newsletter that comes out every single weekend, and that includes updates. You'll get to hear about those today. If you're a returning listener, you already know what's about to come. For those of you that don't know, we do a long-term, a mid-term, and a short-term portfolio. I'll talk about those for a little bit here. So enjoy listening. I just want to do some quick updates. Our daily stock newsletter has reached 10,000 subscribers. And if you want to join them in their quest for daily stock news, check it out by clicking the link in the newsletter or look up The Simple Side Daily at substack.com. That's thesimplesidedaily.substack.com. Go and check that out. I also want to update everybody to let you know that copy trading is just on the verge of being available for all subscribers. And I want you to help me out real quick. I've got a survey in the newsletter I want you to go fill out for me real quick. I think it asked maybe 3 questions. How much money you're planning to invest copy trading the Simple Side. I sent this survey out not too long ago, and I've already had over $200,000 pledged to being invested or copy traded in our newsletter. So I'm extremely, extremely excited about this. Go and check that out. For those of you that don't know, we've returned 44% in our long-term portfolio this year. We averaged 59% per trade in our contrarian bets or our midterm portfolio this year. And our weekly stock trades are 35% returns annualized. So please go fill that survey out for me. It'll help me decide which brokerage I should partner with. I also think I ask you what country you're from just because I want to know if I'm leaving out too many people that are outside of the US. And if I am, I will have to look for another brokerage that's available in both or all places. So fill out that survey for me, please, and thank you. I also want to let you know that the 2024 Letter to Investors will be available next Wednesday. And this should cover the Q&A that I've been promising along with a back page for the newsletter. It'll just kind of cover generally what everything is, where you can find it, all of that wonderful stuff. Also, for those of you that follow my long-term and midterm holds, I should have the revamped portfolio ready to go sometime in early or mid-January. Like I said earlier, the long-term portfolio returned 44 or 43% this year, somewhere in that range. Things are still changing. And the contrarian trades averaged 59% per trade, which is just incredible. And so I cannot wait to get that out to you guys. And that will be able to be copy traded on whatever brokerage I decide to partner with. I also want to let you know that paying subscribers have access to this spreadsheet. And of course, there's a link in the newsletter, thesimpleside.substack.com. Go check it out. And this shows our long-term and short-term buys and performance. And actually, I just added in our contrarian trade performance in there as well. It's a little bit simple for now. I'm slowly making it better. If you have anything you would like to see me add or change, reach out to me, thesimplesidenews@gmail.com. Or if you're getting the email and listening to this, reply to the email. Or, of course, you can DM me or message me on Substack and I will get back to you. But make sure you go paid and get access to all of that and join the hundreds of others that are already paid. All right, let's talk about how our picks performed last week. Well, for those of you that don't know, we have been crushing the SPY over the past 23 weeks. Our 23-week return hitting 16.19%, while the SPY has only returned 5.01%. Annualized, this translates into a 11.32% return for the SPY and a crushing 36.6% return for the simple side. And I've got some cool graphics you can check out in the newsletter if you're reading that, so go and look at that. Now, something you're going to notice if you're reading the newsletter is that the summary of the past few weeks, the performance that I've had over these past couple of stocks, doesn't exactly match their performance from Monday through Friday. Some of the returns are higher, and the reason for that is I give paying subscribers an expected percent return. And what we do is once we hit that expected percent return, we either take a profit. So for example, this week I had Microsoft at 1% and ConocoPhillips at 1%. Both of those stocks surpassed the 1% mark, at which point I set a stop loss at 1%. So I set a stop loss at a 1% return, which means when the stock eventually dropped, because both of these stocks ended up dropping later on in the week, eventually when the stock dropped below that 1% return, my sells activated and both stocks were sold at 1%, locking in returns. And I think Microsoft, if I would have made that 1%, expected trade, I guess you could say, if I didn't make that stop loss happen, Microsoft actually had a lower return than 1% for the entire week. And so that's something that we've implemented for paying subscribers. You guys will see that a little later on, but I'm glad we had it. It saved us a little bit. We still underperformed the S&P 500 this week. This is the third week in a row that we've underperformed. However, over the past, I want to say maybe 8 weeks, we've outperformed on 5 out of, We've outperformed on 5 out of the 8 and only underperformed on 3 out of the 8. So we're actually doing quite well there. Now let's talk about what we're going to report on in today's newsletter. For those of you that are joining us, we talk about politician trades, we talk about insider trades, and I just got rid of an executive trade that we used to cover. I kind of figured these are about the exact same thing as, well, they're kind of the same thing as the insider trades. You know, an executive and an insider are on relatively the same level, and so I felt like it just didn't make sense for us to cover them, and so we've taken the executive trades out, but we still cover politician and insider trading. We also, for paying subscribers, give them the buys that we have for next week, which includes those predicted returns. We've got mergers and acquisitions news. We've got top investment ideas. We've got portfolio updates, which is what to expect for 2025. And then we've got our micro cap picks, which of course are stocks that are usually under $100 million market cap. And then we also talk about expected stock movements from options trading. And this week, the expected movements from options trading is nothing there, I think. Either our model was having trouble or we couldn't get things put together on that. And so there was nothing there, but everything else is chock full of good stuff. So I'll try to run through this reporting here pretty quick because I want to touch on what's coming in 2025. Let me grab some water here. All right, so we track 2 ETFs for our politician trading report. They are NANC and KRUZ, down 0.08% and 0.44% respectively, but both are up year to date, one 28.57%, the other 14.74%. And, you know, politicians must have been on Christmas break because this is the first time that I've seen only 6 politicians making only 8 trades over the past month. And only $113,000 was moved by politicians. Typically, this number is in the millions for a month, usually in the millions for a month. So this is the first time we've dropped down to 100,000. And the only buy that happened this week was Pete Sessions' purchase of Microsoft. So really, nothing else terribly interesting here, but paying subscribers. You can see some more interesting news on the topic of Microsoft later. So be paying attention to that. All right, let's talk about insider trading. We track a ticker SURE. This is an ETF that tracks insider buying and insider selling and makes trades based off of all that movement. This is down 0.23% this week. Let me grab some water here. Getting a little holiday sickness. It's down 0.23% this week and up 12.09% year to date. So underperforming what we would like it to be at, but still, it's an interesting ETF to follow along with. And something that I noticed is that the monthly buy to sell ratio for this month is 0.28. This is a market sell signal. And in the past, on major downturns like 2008 or the 2020 quick crash that we saw, there was insider buying that hit levels of 1.8. And so sitting at 0.28 means we're definitely sitting at a sell just based off of insider trading. And so what we're looking for is things to approach that 1.82 mark again, and that is when we will look at sending out major buy signals for everything in the market. We did have an interesting stock pick this week. We had one company drop $2.55 billion on shares of Avangrid, ticker AGR. Go and check that out. It's pretty interesting, but I want to highlight something else. I want to highlight Buffett's pick of VeriSign, which shines to me. My models put the stock at an 8.9 out of 10, which is a rank not reached by many stocks that I analyze. And I also think the stock is undervalued by around 14% based off of my models. It is boasting a high profitability and high growth, yet the stock is lacking when it comes to financial strength, which might be why it's undervalued by that 14% level. Their debt levels haven't been decreasing recently, and that being said, the ROIC, the return on invested capital, which is basically just saying if you put $1 in, how many dollars do you get out? Their ROIC looks great. And the company has an incredibly wide moat, making VRSN a great buy opportunity for this next week. Paying subscribers, of course, can see more about this later on. Real quick, I want to hit on something. I want to talk about how equities markets have gotten really interesting in recent weeks, really recent months, and even really years. Markets have gotten much more volatile than what is typical. And some of the best investors have had trades unwinding, have had losses everywhere. And I feel like now more than ever, it's time to look outside of equities for decent, less volatile, and often better returns. I was checking out real estate investment platform called FNRP. So go and check them out. They focus on commercial real estate deal flow. And elite investors know that commercial real estate is going to be hot in the coming years, given the poor performance that we saw in 2020. Now, I won't cover the rest of this in the newsletter, but go and read this in the newsletter. It's pretty cool. Or I won't cover the rest of this in the podcast, but go and check it out in the newsletter. It's pretty interesting. For those of you that don't know, I'm also somewhat of a real estate nerd. I just haven't talked about it too much or had as much time to write about it as I would like. But go and check out FNRP. Go and check them out. All right, now paying subscribers, this is where you get to shine. You get to go and check out the buys that we have for next week, M&A news. You get to look at top investment ideas. There's a bunch of good stuff there for you to go and check out. So go and check that out. Of course, there's a comprehensive analysis on stocks that I think are buys for the next week. You're going to like that. But I want to get everybody access to something that is usually for paying subscribers only, and that is the portfolio updates that I have. I want you to know that our flagship fund, also known as our long-term portfolio, returned a crisp 44% so far in 2024, and that's just 14 stocks. We picked 14 stocks. They returned 41% across the portfolio. Major winners are NVDA, of course, NVIDIA, and TSM, Taiwanese semiconductor manufacturing. Those stocks performed incredibly well. I also want to highlight our contrarian trades portfolio, which I've already talked about, but it's our midterm portfolio, and it experienced an average trade return of 59% across 7 stock picks so far. We have a stock that we're currently holding, HIMS, which is up around 60%. And the average holding period for these trades was around 4 months. Of course, like I said, we still have a bet on HIMS out and an AI/SMR portfolio. SMR standing for Small Modular Reactor. And that's more of a long-term contrarian bet, but we expect that to be performing extremely well in the coming years. Of course, looking ahead, I want everybody to be violently aware that we will be creating the one-click buy for our long-term, midterm, and possibly our short-term buys. This will give investors easy access to all of our market-beating financial insights, I guess you could say. And I just want you all to be aware of that and ready to go. Like I said, the portfolio will probably be revamped, sent out to investors, and put up for one-click copy trading sometime in mid or early January. So be on the lookout for that. And thank you so much for joining us on another week of The Simple Side. I look forward to seeing you next weekend. Keep on investing.